Hi everyone, welcome to the Tortoise Newsroom. It's lovely to see some guests and outside members and people and so many tortoises here. I'm very lucky to be joined by Stephen, but we've also got two experts who will be joining our hybrid thinking. I really want to hear from everybody on this one, not least because it's the first sort of thinking that I've hosted in the newsroom, and it's exciting for me, but it's a subject that has become like increasingly impossible for me to ignore, and I hope for other people feeling similarly that it's kind of a growing matter of significance. We're asking, is Bitcoin a good investment? And I hope that that conversation will get into some sort of bigger topics about digital inclusion, cryptocurrencies in general, the safety of the technology, and some of the issues that were on the slides that we were just showing. But yeah, by way of introduction, I've got Stephen Diehl, who's a software engineer and a writer. And joining us remotely, we have Reda Farran, who is the co-founder of the InvestInU Academy, as well as an investing analyst, and Diana Biggs, who I believe has just joined. Excellent. Diana Biggs, who is the Chief Strategy Officer at DeFi Technologies. And between us, hopefully, we'll be able to get round to a better understanding of whether Bitcoin is a good investment. I also say at the top, this isn't about providing investment advice for anyone. So don't like, I don't want anybody like whipping out Coinbase during the break in the middle to like make a big decision. I do hope, though, it will help us to make sense of what's going on. So without further ado, one of the questions that was in the slides just there asked, if Bitcoin were a company, what would its ESG rating be? And I think that question was about the fact that sort of 30, 40 years ago, we had an old school way of deciding whether something was a good investment. And often that meant, like, what was the return on it? Was the return good? Did the line go up over time, depending on whether you had a short or a sort of long-term position? But in the intervening years, we've come up with some different ways of thinking about what a good investment is, and loads more stuff gets sort of piled into that to do with the environment, to do with how it affects society, to do with governance, and that's kind of what we were getting at with that ESG question. So, as I said, lucky to be joined by some people who know a lot more about this than I do, and hopefully have some views on it that will help us fulfill the aim of having sort of a civilized disagreement. But I wondered if I could start with you, Stephen, just because you're physically here, and it's nice to be able to speak to someone physically. What do you think of that question, first of all? Not necessarily what rating would Bitcoin get, an A+ or a D, but what do you think of the idea of analyzing Bitcoin along those lines? Do we need to think about the environment, social governance implications of it, or is it in a world unto its own?
Well, I don't think that any asset class exists in a world unto its own. Like, everything exists inside of a social and political context, even our investments. And like, ultimately, we all have to live with the externalities of what our investments do, like what our money actually does in the world. And I think it's a very poignant question to ask, like, what are the consequences of investing in a Bitcoin? Like, what is it actually doing to the world? Detached from the kind of financial and the fundamentals of it entirely. So I think it's a very poignant question. And unfortunately, I think Bitcoin is probably one of the most toxic kind of vice assets you could probably invest in today. Mm-hmm. And we can go into details of why.
Yeah. Yeah, that's a big statement, isn't it? And I think that without sort of leading the witness on this, there's, at least in my observations, there's been a big bifurcation, a big splitting in two of the people who talk about this into pro and anti camps. And I've spent a lot of today trying to sort of get myself familiar with what's going on, and started to see that this argument's like, there aren't many places where there seems to be an interaction between people with different points of view. Rather, there are places where they sort of shout their opinions at one another. So hopefully we'll get a chance to do that. I wondered if we could hear just in turn from Reda and from Diana, if Reda's there. When we spoke before the think-in, I was curious about like what you thought it was responsible to recommend to people with regards to Bitcoin, and the fact that investors are now often looking for something other than for that line of return to go up. So I guess I could put the same question to you, Reda. Do you think it makes sense to look at Bitcoin as something that could be subjected to that kind of ESG analysis, that analysis in terms of environment and society and governance?
Thanks. No, I think 100%. I think increasingly, if you look at what institutional investors are doing, they're looking at every single investment, be it kind of stock investments, real estate investments, even crypto investments from an ESG point of view. The thing for me, I would say, is, kind of taking a step back, and I don't work in the crypto industry. I wouldn't classify myself as a crypto diehard or anything like that. I think answering the question, is it a good investment? And I'm really trying to look at the question as it is from an investor point of view. So I'm trying to take an investor perspective. And for me, the fact that we're having this debate right now, is it a good investment? It means we don't know, right? We don't know in the future, 10 years from now, Bitcoin could not exist anymore, or it could be worth more than $100,000. And as an investor, I need to be pragmatic and recognize what I do not know. And I have to look at the asymmetry of returns. And what I mean by that is, look, if I invest in Bitcoin now and it ends up going to zero, I will lose 100%. But if Bitcoin ends up, staying and I end up being kind of correct, the returns are more than 100%. We can go into details in terms of how I think about valuing Bitcoin, etc. But I think there's an opportunity, for example, that it could be, worth, let's say, 250% more in the future. So that's what I mean by asymmetry. You can stand to gain a lot more than you can stand to lose potentially. And from an investor point of view, these are the kind of bets you want to be making. Now, that doesn't mean you want to, bet the farm or bet the house on this. Absolutely not. But does Bitcoin have a role, a small allocation in your overall portfolio? I think the answer is yes to that.
Mm-hmm. And I guess you've alluded there to one of the metrics that go into investment decisions. But what about the point that for some and an increasing number of investors, like when I was looking today, the guesstimate that there are about $35 trillion in the global economy looking for ESG opportunities. What about the other factors that go into that decision making for an investor beyond the increasing value?
So 35, I mean, we touched on I think there was a chart you put kind of when we were sort of waiting in terms of the S and the G metrics actually being quite good for Bitcoin. I think the E metrics are overstated in the sense that they're made to appear worse than they actually are for Bitcoin. So actually, if you look at the facts, Bitcoin, I have this somewhere in my notes, like in terms of Bitcoin energy consumption, it's about 0.05% of the total amount of energy consumed in the world. And there's actually a study that shows Bitcoin accounts for 0.08% of the world's total CO2 emissions. So I think, there's this kind of size bias that we all have in our heads when we look at, oh my God, 80 terawatt hours, annual consumption, annual energy consumption by Bitcoin. But once you actually, look at that, compare that to a base of total global energy consumption, it's nothing. It's an absolute rounding error. So I think the E elements are exaggerated. But in terms of money looking for, you mentioned the amount of money looking for ESG investments. I'd also look at things differently in the sense that, look, in the world today where, governments are printing money like crazy and the amount of debt is increasing also like crazy, there's a lot of money looking for assets that are good stores of value, such as gold or gold equivalents. And I'll make the argument later on that you can view Bitcoin as essentially digital gold. So in this world that we're in, with inflation running, where it is really high, money printing, debt, fiat currencies losing their value, there's also trillions of dollars looking for assets that can act as good stores of value. And this is where Bitcoin can also, find, be a home for this money.
Yeah, that's really helpful, Reda. I think when we sort of wrote the blurb for this thinking and tried to frame the discussion, there was obviously a risk of being overly negative and I've been on too many sites that sort of use bullish and bearish today, but being overly negative or overly positive in the way that we framed it. So I wanted to try, at least in myself, to take the perspective of someone who's on the sort of positive line for a bit and someone on the negative line, hopefully land in the middle. Diana, when we spoke earlier, which was extremely helpful, we kind of introduced the concept that in Bitcoin and in cryptocurrency, in Bitcoin specifically, and in cryptocurrency more generally, there is the opportunity for, or there may be the opportunity for a change in the status quo for how finance has worked for a long time, particularly with a point around access and inclusion for people who typically haven't been included very much and had much access. I wonder if you could speak a bit about what that really means, what's the sort of potential future we could build around cryptocurrencies, and why it's important, say, for women and for people who've previously been marginalized.
Yeah, absolutely. So I think in order for you to really see value in, let's just start with Bitcoin. I think there's a lot of other cryptocurrencies out there and a lot of other paradigms that have come after that. And if we just look at Bitcoin fundamentally, I think you have to, for you to believe in it at all, you have to believe in the possibility of a new type of system or a new type of money. So there's already that sort of decision that you have to make in your head in terms of like whether you're going to think this is important. You have to actually put value on a decentralized new form of digital money. And I think if that's not something that's important to you, then the energy, the disruption, all these other sort of existing, I think, misconceptions, because a lot of them are misconceptions, are going to be easy narratives for you to believe. So I think if just starting with that, there requires an optimism about the future and for there to be the possibility of something different emerging. And for that, also, you would also need to understand the reasons why there might be a need for something different. And if you're sitting in, say, in London or in the United States, and that's where you've always been, and that's your paradigm, and money is working fine for you, and the existing systems of banking aren't excluding you, and you have access to credit cards, you have access to a mortgage, and that's all fine, then I think it's really easy to understand why you might think that this other system is completely unnecessary. Mm-hmm. For me, I mean, I grew up in Canada, but a lot of the people around me and my friend groups and people that we knew came from other countries where they didn't have that type of political stability and came to Canada for that reason. So kind of growing up understanding those narratives of their other systems, of governmental systems, financial systems, political systems that don't work for people, kind of just helps to set the framework in your head where you can see why something different might be necessary. And then actually, I was personally working in sub-Saharan Africa initially for large banks, and then for Kiva and microfinance. And it was actually through that experience, and then I moved to New York City after, and then had a company where we were operating between Kenya and the United States, trying to move money. And then I had been living in a system where there was only 2 ATMs, you required cash to pay for airplane tickets, and the ATMs were run out of money, and a lot of people didn't have access to any kind of financial system at all, going into certain countries where because of inflation or other issues, their money had become worthless. That then opened up to me the idea that a digital global money that existed outside of government paradigms could be actually something that could be important for people, that could allow for inclusion, that could allow for, top of inclusion, just another level of efficiency that doesn't exist today. Yeah. And that's for both from the large scale banking system as well as for people that exist outside of that system today. So that's really what started my personal interest in it. And it was about looking for the opportunities and the possibility of a new system that could replace existing paradigms or maybe coexist with them, that would inherently enable a different type of inclusion and efficiency from an overall global perspective, and one that would operate 24/7, as long as along with a number of other interesting aspects that came uniquely with it. And it's the sort of thing that you wouldn't believe would be possible. I think most people wouldn't believe would be possible, but it was actually already in existence. And then I think sometimes the ideas like these are actually too big, that they grow, even when it seems at first a little crazy. And I think we've seen that with Bitcoin, and then we've also seen that with Ethereum.
Yeah.
And having had the ability to watch those things happen and grow firsthand, I mean, I first came in 2013. Yeah, it's like the ideas are themselves needed, and then they will then blossom.
Right. I guess I'm left thinking that there are quite a few steps that go into seeing that future blossom, and quite a lot of uncertainty still, whilst it might pay off ultimately to be optimistic about it and to believe in some of the desires that have brought it about. Stephen, I want to give you a chance to touch on any of the stuff that was just raised there, because obviously there's quite a lot about building an alternative future of finance. And then there are some really interesting ideas in the chat also. So maybe we could line up to be able to hear from a thinking stalwart in Andrew Girdwood, as well as Tom Schuler, and potentially John Hawksey also. But so Stephen, what do you make of the vision that's been set out around cryptocurrency as ultimately decentralized, more democratic way of doing money as humans?
Well, all of the arguments we've heard tonight have been predicated upon the fact that people are a priori assuming that crypto can actually function as money. And at least among most of the economists I know, there's a great deal of debate about like what type of financial instrument cryptocurrencies actually are. Are they a store of value? Are they actually a currency, or are they a speculative asset, right? And a lot of the kind of confusion that happens around cryptocurrency, especially when talking about things like ESG, is that we kind of mode switch between like speculative asset and currency.
Right.
And the kind of imaginary in which there's a new kind of financial system is predicated upon the fact that you get money right. Money sits at the foundation of the financial system, and then we can build things like common enterprises and like financial products on top of that. So unfortunately, crypto has a really bad track record of actually being money. The only thing I know that's actually denominated in Bitcoin is actually like a flat in El Salvador, right? There are other things that are sort of illegal products as well, but like
You said a flat in El Salvador.
A flat in El Salvador,
Right.
costs 3 Bitcoins, right? This is the one thing that's denominated in Bitcoin. You go to Tesco's and buy your chicken denominated in Bitcoin
Right.
for a very good reason, because it sucks as money, right? By design. It is a artificially deflationary asset which uses enormous amount of power for its existence, and whose base economics are predicated upon a fixed supply but a variable demand, which means invariably you're going to have kind of a, well, remember your Econ 101, right? You're going to have a price that fluctuates up and down relative to demand, right? So unlike the pound or like the dollar, where there's a central issuer that can actually kind of modify the supply and modify things like the demand for it in terms of taxation, right? There's no central issuer of Bitcoin. And so you get exactly what it's designed to do, which is basically be a hyper volatile product that people bounces up and down and people gamble on its price movements. But in terms of it being money, that's the exact opposite property. Some people want money. You want something that's going to be, the pound is really great as money because we can write loans in it for like 10 years, right? And we know what its behavior is going to be within a very small window, right? This is what a currency is good at. So fundamentally, I disagree with the entire notion that we can take this hyper volatile speculative gambling product to the third world and it's going to provide inclusion. No, it doesn't function as money.
And do you hold that view not just in the present and in the short term, but in the long run through to a sort of 10, 15, 20-year horizon in which some of the characteristics of the technology could be resolved?
No, I think fundamentally there's an intractable problem in the fixed supply of it, right? So crypto, Bitcoin and specifically, interprets the features of fiat money as being bugs, right? Things that are actually problems, but the fixed or the variable supply of a currency is actually the most powerful feature of it, because it allows a central party to have price stability. And when you have price stability, you can do things like have commerce, have an economy, transact in it, write loans, right? You could never write a loan in Bitcoin. So fundamentally, if we can't have mortgages in Bitcoin, how will this ever kind of function as like a vehicle for basically running an economy on?
Yeah.
Right? So then you can say, okay, well, it's a speculative asset. It doesn't actually have to function as money. But then as a speculative asset, it's basically an investment that has basically no fundamentals. It exists purely as a manifestation of like the greater fool theory, right? It exists basically purely to speculate on what the next person will buy it after you. So those are the fundamental problems. They are interactively and they're baked into the system and they cannot be fixed.
Yeah. Right, so that's compelling. But I wonder, I do wonder, and I was giving you a fair shake. I do wonder, just off the back of some of the stuff I read today, people make the same sort of confidence-based arguments about existing fiat currencies, and that the system we have amongst us is based on the extent to which each of us trust that a given token is worth a certain amount. And we've faced issues in the past with the fact that centralized currencies, fiat currencies, are controlled by central banks, and those central banks and other government organizations are not always trustworthy. So do you see a chink in the armor of your own argument anywhere?
So there are central banks that are corrupt. I don't think the Bank of England is a corrupt institution. There are certainly some problems with the kind of externalities of the pound, but you know, millions of Brits in this country have mortgages. We all go to the grocery store. The pound works. So the outcome of this is that we have a stable money supply that's been working for the last 25 years, okay? I mean, we can debate about the kind of, you know, whether the central bank could be improved or like whether, you know, certain policies could be improved, but fundamentally the pound works because we write loans in it today. How many loans are being written in Bitcoin?
Right.
0.
Interesting. I can see Reda has his hand up, so maybe it'd be a good chance to get to you next to give you a chance to speak. And then, yeah, if we were ready to hear from Tom and John Hawksey, that would be fantastic. Reda, are you there?
Yeah.
Excellent.
Yeah, I think the problem with that entire narrative is that it's grouping all cryptocurrencies and saying, hey, they're trying to be new forms of currency and they're now working. And I think that's incorrect to say, because you've got, I can't even put my head around, like over 5,000 different coins at the moment, and they're all not trying to be currencies. So if we look at the top crypto projects at the moment, each one is like trying to fulfill a different purpose. So Bitcoin was originally intended as a new kind of a new form or different form of money, not controlled by one central party. The Bitcoin network has a lot of limitations in the sense that you cannot process as many transactions as you can compared to, let's say, a Visa or a MasterCard, etc. So Bitcoin has ended up, but you know, Bitcoin's narrative is now centered around its limited supply, its similarities to gold, etc., and as a store of value. And if you look at Ethereum, for example, which is the second largest cryptocurrency, you can view that as the world's sort of most powerful decentralized computer, and you've got all these applications being built on top of the network. And then you've got some, and we've made the crypto industry, you know, it's still young, but it's made so many advancements to the point where actually now you do have new blockchains such as Solana and Avalanche that can actually process payments faster and better and cheaper than Visa and MasterCard, for example. So this technology is still new and it's still evolving. And different coins are trying to address different problems, essentially. And there are different kind of purposes for each coin. So I think trying to group the entire sort of crypto industry as saying, hey, this is trying to become an alternative form of money, I think that's the wrong way to look at it, because that's not entirely true. Like, you've got different coins being developed for different purposes, and the technology is advancing extremely fast.
Right, that's really helpful. I guess part of what I was getting at in the question about the sort of the very short-term horizon, then the middle term, then the long term, is like, what's the potential of the technological concept rather than the technological reality as it is right now? And I think that's a helpful point to have in view, which is that it's, I guess, cryptocurrencies are not a finished product yet. That's really helpful. I think it would be good if we could to hear from Tom and then from John Hawksey, because before we get too far away from the initial points that they made. Are you there, Tom?
Yeah, I am. Hi.
Oh yeah.
I think some of my points have been answered probably, but my two concerns were one with volatility and the other with transparency. I mean, however unreliable our central banks are, they are at least in some sense transparent. I take Diana's point about access. I hadn't thought about that, about it providing wider access. But maybe the overall question for the hour should have been, is Bitcoin a good speculation rather than an investment? I can't get my head around any sense in which it's an investment other than in that speculative sense.
Right, right. It would be good if Diana, you wanted to comment at all on that. But also, obviously, it's thinking everybody in the room. My colleague Phoebe's got her hand up. It would be great to hear from her. And if we could have John Hawksley lined up, that would be amazing. What do you reckon, Phoebe?
So I'm sorry, questions. And something we've talked about is, I get the point on availability. I think there was that really interesting story of people using RuneScape in Venezuela as like a more solid form of currency. That was kind of fascinating as kind of insight into that. But at the same time, like, who are these investors, right? Because that's my question always. Like, who are the people investing? I saw the stuff at the Super Bowl. Everyone opened Coinbase. It crashed. That's great, and I see the ads on the tube. They're everywhere. But are we the people investing, as me, as a young person, or, you know, should I be investing in a mortgage? Should I be investing in cryptocurrency? But actually, the reality is, it's probably like money. A few top people kind of switching money between them. Yeah. Is that where we? That's my question with it. It sounds great, but that seems like the reality.
Yeah. Diana, that at least seems like it's something quite close to your area of concern, this idea of access, availability, and what the end state might look like if it were to, challenge some of the existing inequalities.
Yeah, so Bitcoin is interesting. It's a network. It's an open source protocol, and it's the digital asset itself. So actually, not only can anyone participate, and anyone can, depending on what avenue you want to go down, acquire Bitcoin, download a Bitcoin wallet and hold it. Anyone can also view all of the source code and even make contributions to it. It's open source. So anyone sitting here could have input into how the system is run and designed. That's one sort of differentiation and new paradigm compared to our existing systems. All of the transactions are also available to view online. So that question of transparency, there's actually hyper transparency, because the Bitcoin blockchain is an open public ledger. That's how it enables things through the use of AI and through other technologies. For the DOJ to have just done last week their biggest capture ever, because actually everything is traceable on a public blockchain. So those are two new paradigms. And in terms of that access, I mean, I think it's difficult when you hear somebody phrasing that, like, should I get a mortgage or should I get Bitcoin? I think that has to do with an overall question of like financial planning and portfolio management. That I think just highlights also, that's something that we're not currently learning in school and probably being taught enough of anywhere in the world. It's really about management of finances and how that works, and how to invest or not invest as a question, and where you want to put your money and how much of it makes sense to put where. I mean, certainly would never give the advice to anyone to put all into any type of avenue. And I think here it's really, and the point was raised earlier, it's about deciding like whether an allocation makes sense and to what extent, but certainly not a choice of and or for a mortgage. And also the point that, you know, mortgages work, money works in a country like the United Kingdom. That's why it works for some people, and that's not a necessary paradigm for others. And it's, if you don't need that type of system, or if you don't believe that other forms of systems interacting and being used and having use cases around the world is possible, then it's not one for you. But it doesn't mean that that system is in itself unnecessary or taking away from any other.
It would be really helpful. I know, Katie, you had your hand up just beforehand, and it would be amazing to hear what you wanted to say. And I don't know if you've developed your idea with Michelle, but yeah, what do you reckon?
I didn't talk to Michelle. I talked to Sam.
Perfect.
So I was going to say that the thing that struck me was that my sort of starting point coming into this is my own financial literacy is probably not as good as it needs to be generally, which is money as a concept and construct. I don't really understand all the central bank and all the stuff you were talking about, Stephen, like in the sort of all the different ways. But I've got, a financial advisor who will advise me around how to sort of make sure that I have a pension and I can retire at some point and do all that sort of stuff. So my first thought was, I've not heard my financial advisor ever mention crypto as something I should be thinking about. So there's quite a big gap between potentially the advice people are being given about how to manage money, and maybe that's because it's not mainstream, or maybe it's all the points you've made, which actually it's not really an investment per se, it's a speculation, as our member said before. The second thing was what Diana said about, anyone can open a wallet and you can look at all the code and you can change the code. And I'm like, Jesus, financial literacy was bad. Now I've got to have digital literacy in a way that I'm never going to really understand or engage with. So that's then put me off even more. And then I'm just sort of left with this overwhelming sense that I suppose that I'm going to be the person that comes to it very late if I ever come to it, because ultimately it would have to be the advice that I get given about how to make investments that this would be part of or not, for me to even look at it, because I'm not going to go and open a digital wallet, because I always remember that man in Wales who threw it away and then lost his billions. And I'm like, well, if he can do that and he understands what he's doing, I mean, I can't even remember the passcode to my bloody tortoise membership, so I'm not going to do it anyway.
Don't need the emotional trauma of the lost hard drive. That's really helpful though, because I think watching, I don't know if anybody else did, but watching the Super Bowl, the NFL big game on Sunday night, it was actually quite clear from the adverts that they ran and the way that they ran them, who they were targeting with that message, I think. And what we've seen in researching for this, thinking and reporting elsewhere, is that there is quite a narrow demographic when it comes to participation in crypto investing. And Katie, you are not in it. But, well, so I think it would actually be really helpful if there is anybody, I don't know if we can do this. Can you raise your hand if you've invested in a cryptocurrency? Is that okay? Excellent. It would be really interesting to hear why and what you're like. Was it a recent thing? Do you want to grab a mic?
Yeah, so I used to work with a lot of what I'm going to term techies, and therefore I was very late to the game for them, but now I realise too ignorant to really get going. And I think one of the things I was just talking about was if, and I'm assuming I am more in the kind of target coin. Huh? I am more in the target, and yet I think something that isn't really thought about is the effect that has on the kind of mental health of people that are investing. When there is this idea that you invest, it all goes up, it's all fantastic, and there was a stage in lockdown when things were boring where I was just checking Coinbase all the time, and that's not typical of me at all. And I think. I definitely think there needs to be more of a conversation around whether this is like gambling, betting, and how, I'm sure you're agreeing with me, but and how we regulate's maybe the wrong word, but certainly think about it more in terms of being a sport. Yeah. There was some really good reporting actually just in the last day since the Super Bowl around the kind of convergence of entertainment, sports, gambling, and speculating on cryptocurrency. I'm conscious that we want to get to the point. Sorry, remind me your name. Susan, thanks a lot. So I'm conscious I want to get to Susan's point, but it would be great to hear.
Yeah, I'll just say very quickly.
Yeah.
I do know a lot of people who have bought into crypto, and I had 3 phone calls in 2 weeks when it was in the news a lot recently, a few months ago. My brother-in-law, a best mate, and another guy who's a cab driver. So I know a lot of people who've I haven't bought any crypto because I don't have any money that I can afford to lose, but I do know a lot of people who, that's not to say I don't think it will do well, I just can't necessarily afford to gamble that money, right? So I do think it's a gamble, and I can't advise people, I'm just, you know, another guy in the street.
Yeah.
But I do know a lot of ordinary people who've bought into it who would never have bought any stocks or shares or anything like that, and so there is a lot of hype, and I think there's a lot of people buying into it, and I know someone who spent a lot of money into it. So.
How have they done? Do you know?
Yeah, I mean, he's slightly down, but he didn't buy, you know, in the context of what Bitcoin has done, he didn't buy, you know, at the beginning. He bought quite high in the recent context, and he's not lost a huge amount, but it is very volatile. He says it's a long term. I mean, there's all the lingo. We haven't really talked about the lingo. There's all sorts of made up language that they use, like the FOMO, which was something pre-existing term, but also, oh God, diamond hands. You have to have diamond hands so that you don't sell when it goes down. There's all sorts of ways that people talk to each other.
Yeah, it's definitely a cultural and sort of linguistic universe all to its own now. You don't have to look very hard at sort of crypto Twitter to see like that there's some strange stuff going on. It's actually helpful to get us back to the framing at the top about the E and the S and the G, because I think that's an S issue. If we think about who is being invited in first by the way that it's marketed and advertised, etc., and through the differentials in literacy, that stands to have a really big effect on society. Joe.
So when you mentioned ESG, I just wanted to add something, and maybe we'll tee up talking about the issue Susan raised. Your, you know, the title tonight was, is Bitcoin a good investment? But we're really speaking more of a category. That's a punchy title, but it's, I think, more, is crypto a good investment? And as Rena noted, and perhaps the energy consumption of Bitcoin, which is what it always gets clubbed with by a lot of naysayers, especially in the popular press. You know, I can open The Guardian most days and see somebody complaining about how Bitcoin is ruining the world because of energy consumption. There are other cryptocurrencies out there that use techniques other than proof of work and don't have that issue. They may have some of the other issues that Stephen mentioned, but they don't have that one. So more broadly, it would be good to bear in mind or explore in the future some of the other aspects if the energy could be solved. Because that's the club that's always used, and it applies to Bitcoin. It doesn't necessarily apply to the others.
Can you do proof of work for us in like 20 seconds for the room?
I actually would probably defer to Stephen.
Can you do it, Stephen?
Make money by wasting energy.
Oh, okay, well,
or burning a lot of energy to solve really hard math problems, which is the basis.
And my understanding was that if you're not the first to the solution to that really hard math problem, your work gets wasted, and you have to start working on the next one, something like that. So it increases the energy cost of the process overall. I want to see if we can get to a question that is like the sort of G component of the E, the S, and the G, because there's actually some really good work being done on indexing the energy consumption, etc. I feel like that's actually something that people can go away and look at some fairly empirical studies on. And I certainly can't hold the figures in my brain, although there were some in the slides. And I think in your work, Stephen, there's quite a lot about energy consumption and it's the structural issues that lead to the energy consumption. But there's not so much, and I certainly haven't heard so much about governance and how this will ultimately sort of be controlled and shake out in the future. So I guess I have a relatively simple question for Reda, which is, when you look at the medium to long-term horizon for investments into cryptocurrencies, do you expect any sort of seismic changes in how they're being organized now? Is there the potential for abuse? Is there potential for big improvements? Because you made the point about the technologies evolving earlier on.
No, 100%. I mean, you're already seeing this shift in motion as we speak, and you have this concept called DAO, or Decentralized Autonomous Organizations. These are large crypto communities, are basically self-governing, and anyone who owns basically 1+ tokens can put forward a proposal to modify the project, etc., and then other token holders or coin holders vote on the proposal. And this, and you know, I'm part of these Discord channels, which is kind of sort of like Slack equivalent channels where all these people kind of collaborate and talk. And I think it's really fascinating that you have, you know, these communities that are basically kind of governing themselves without one sort of central entity. If I may, I just wanted to touch on very quickly just some of the points that, you know, some of the people in the audience raised about day trading, the advisor, etc. And to me, these are not crypto specific. These are not problems to crypto per se. You know, I think it was Susan who mentioned, you know, checking her phone, Coinbase often. You can do that if you're day trading stocks. You can do that if you're trading, you know, currencies. The currency market is open 24/7, 5 days a week. So, you know, we're talking about the pound and how beautiful the pound and the dollars are. But you can be stuck to your phone trading these as well. So this is, or you can be sports gambling. This is not specifically an argument against crypto. On the advisor front, you know, I mean, I'll take a wild guess. Perhaps this is like a 60-year-old white male in a bow tie trying to, you know, who's a financial advisor that probably doesn't understand crypto and therefore doesn't have the expertise to tell you with confidence, hey, maybe you should put 5% of your portfolio in crypto because, you know, this could be a big thing or this could not end up being anything, but you might as well allocate a small portion to it. And the whole concept of diamond hands and all that came up, you know, with the meme stock frenzy that we saw with AMC and it was GameStop and so on. The one thing I just want to say is that, you know, I think if I had to take a bet, I would say the majority of the people in the room, and judging by the chat, are anti-crypto. And I think that's completely fine. I would just say, you know, as an investor, because once again, going back to the question, is Bitcoin a good investment? So we're approaching this from an investment point of view. And my top advice to any investor, as someone who works as a professional investor, is to just be pragmatic and to not you know, fall for confirmation bias, which is not seeking out and only reading information that confirms that, hey, Bitcoin is, you know, crap or whatever, but to actually read the opposing point of view and read the arguments for Bitcoin and what it's trying to do. And one good analogy I'll give you is, you know, look, when the internet first came out, you had this massive speculative frenzy that was called the dot-com bubble, right? So you have all these internet stocks in the 1990s. Everyone was, you know, speculating on them, gambling. Everyone and his grandmother was betting on these stocks. It ended up being a big bubble and the bubble burst, right? But the underlying technology, the internet, stayed here and ended up changing the world, right? And there could be something very similar happening in the crypto world at the moment. Yes, there's a lot of speculation at the moment. Probably we're in a big crypto bubble and perhaps it's going to burst soon. But the underlying technology, blockchain technology, I think is super fascinating. Lots of big tech companies such as Microsoft, Amazon, Facebook, etc., and even big banks are trying to incorporate blockchain technology into their own work. So there could be something big there, and it could end up being the future. Like when the internet first came out, there's this video I will never forget. It was Bill Gates on a talk show in 1997 or something like that. I can't remember the date. And the talk show host was laughing at him. He's like, the internet, why would I plug my computer to this network of other computers? Ha ha. And he would laugh. But who ended up laughing, you know, in the end, right? So that's the only thing I'll just say is really try to keep an open mind and don't fall for confirmation bias.
Right. Thank you, Reda. There are two interesting comments actually side by side here, and I wonder if we could get Catherine Wynne Powell or Tina Bernstein able to speak. I want to dig into what I think is the concern that quite a lot of people will have come to this conversation with, which is that a good investment is not one on which I do well financially only, but it's one where I feel like I have created a net positive effect in the world. I think that's where the starting point of the 35 trillion and stuff came from. What is it about Bitcoin, Stephen, do you think that does or doesn't leave, or should not leave people with the sense that they've done good in the world when they've made even sort of a small commitment to it?
Yeah, I mean, let's just go through the ESG then. I mean, like the environmental footprint
Sorry, I should have said more specifically down that sort of ESG ladder. If we're trying to take that last point of governance, whether it's sort of control, representation, and the bigger point of ethics, I suppose. What there is the issue that you see? Does it relate to democracy? Does it relate to truth? Like, what are the main aspects of it?
As an asset class, its governance parameters are by design designed to basically exist outside of the regulatory perimeter. So the reason your financial advisor is advising you to invest in Bitcoin is the Financial Conduct Authority here in the UK says that there's no recourse. If there's any kind of damage to your accounts or your holdings, right? Because these things are designed to basically exist outside of the law. Okay, so how can you reconcile the fact that these things exist, in this extra legal gray area where governments have no control, and like your average kind of single mother that invests in these things has no kind of recourse within the kind of normal legal framework for when these things go badly?
Right.
Right? That to me seems like there's finally a government's failure by design, right? It's entirely a product that exists for what we call in finance regulatory arbitrage, to basically evade laws. Mm-hmm. Now, we can debate about whether the laws are just or not, and that depends on the kind of jurisdictional context on these things. But, the problem with Bitcoin is that, fundamentally it's a vice asset. It exists to speculate on as a gambling product, and it exists to basically, be unregulated, and for people to have basically just like it's like a casino boat where you go out to like the international waters and gamble. It's like that. Mm-hmm. So whether that's good for society or not, I mean, you can make an argument that gambling as a whole is kind of a negative expected return game, right? You're almost guaranteed to lose money. And with crypto, it's basically a giant wealth funnel that basically funnels money from the public to a very small set of insiders. And the crypto market, and Bitcoin specifically, has if you look at the kind of wealth concentration that occurs in it, it has a Gini coefficient actually worse than North Korea.
Right.
It's largely controlled by a very small cartel of insiders.
Gini coefficient being the wealth inequality curve, right? It would be good to hear from Catherine if she's there, raising the point about the variety of. Okay, well, hi guys.
Hi.
Do you want to say what you were saying in the chat?
What was I saying? Which bit?
There's a. There was a point here about investing in a coin like Dogecoin, and forgive me if I'm wrong, but did you mean Dogecoin?
Dogecoin, yeah, sorry. Bit of a... Yeah.
Is a gamble, but there are plenty of other coins that have genuine utility and aim to solve a problem. I wondered if you were sort of building on the points that Reda had made and what your sort of experience of that was.
Well, it's really from investing in particular currencies. And that investment is a gamble if you don't really do your research. So if you are picking up an app, which is really easy to use, and the way the apps of people, as people have mentioned, are promoted, it's really easy to just get caught up in some Twitter chat and think that Dogecoin is going to the moon. And you are literally putting your money into something that has no use at all. It was set up as a joke it's a fork of Bitcoin. It's an unlimited number of coins. And when Elon Musk gets excited about Dogecoin, it just goes nuts. But it's not going to solve any problems at all at the moment. Now that could change, it may well change. But as has been mentioned, Solana, for example, is out to solve problems. Mm-hmm. Luna, which is very exciting, is creating a stable coin that could become very secure. So there are projects which are genuinely exciting. They will change the internet forever because essentially Bitcoin, the protocol, changes everything. And I know that sounds like a bit of a dramatic statement, but it does. I mean, it's changing the way I look at money. It's changing the way I perceive energy. It changes so many things. But Dogecoin, it doesn't change anything.
Yeah. I guess we start at the top with the idea. Enjoy your holiday, by the way. It started with the idea that this was like a threshold moment. But I read in a blog post that Seb very helpfully sent to me today that the first of the technologies that is relevant to this, the sort of permissioned blockchain, which is the one that is sort of added to in an organized fashion by someone who has sort of pseudo control over it. That's like 30 years old, that technology in particular. And then the permissionless one, which is the one that everybody sends their information to at once and there's no real consensus mechanism. It just happens basically by sort of random election, what gets added to the blockchain. That's still like 13 years old or so. So are we still expectant of the big transformation that you allude to? And will it be a positive one if we take at face value some of the skepticism and criticism that you've brought to this, Stephen, not just on the E, but on the S and the G also? That's the question I think I'm going to come away with. But it would be great to hear what Tina Bernstein has to say, because she's mentioned investing with a group of her friends, and I want to hear about it. No response from Tina. Okay.
Hi.
Oh, hello. We definitely heard Tina for a moment.
Yes, I'm here.
Excellent. Hi, Tina.
But I'm not on video, if that's okay.
No problem at all.
Okay, thank you. So, sorry, what was the question?
My question was, you said, I just started with the help of a good friend investing, and you have a small group of investors that share learnings, and you're all over 55.
Yes, that's correct.
And what,
so I would have...
Yes, sorry, go on.
I would have never got into it without somebody holding my hand, somebody very knowledgeable, somebody I trust 100%, somebody smart who can see all the different points, you know, not somebody who's just sort of out to make loads of money and is a dreamer. And I can't say I'm an early adopter because I'm very late to the cryptocurrency, but I'm not, I am somebody who's really interested in new technology, new money, new everything. I like to know things. So I'm actually enjoying the journey. It is very volatile. You have to have a strong stomach. You have to have resilience. Every time I've invested, it sort of dropped 30% the next day. But as I said, my friend very kindly holds my hand and explains to me how this works, because he's been in it for 6-7 years. So he's gone through it. So my advice to people is, and I have loads of people in my world who are naysayers, they think I'm mad and all of this stuff. And I think sometimes it's the fear of the unknown. I'm a very curious person, and I'm fascinated by this conversation, hence why, although I'm not feeling well, I'm present. And I think it's been really good because we've had loads of different sides.
Yeah. Thanks very much, Tina. I wonder if we could get to Diana, just because she's had her hand up. I assume for I'm really sorry, I can't actually see who has their hand up on here. But Diana, yes, please.
Yeah, no, so what I was going to say was just that there's plenty of misconceptions, and I think one strong one that we're seeing in the chat is around the use of energy. And actually, a lot of the mining is done for using energy that would otherwise be wasted. It's not cost effective to actually move energy around, or it's not possible from, say, a rural to an urban area. And obviously miners are looking for the most cost-effective energy, and that happens to be renewables. So it's actually an investment case. And I would just encourage anyone to look into that deeper if that's something that is a sticking point, and it was brought up earlier. And just around the sort of the fear of investment or feeling overwhelmed by the amount of change and the combination of money and technology, those are two scary topics for a lot of people, and you're combining them into one in digital assets. So it's normal that for a lot of people it's too overwhelming. And then also there is that, as he mentioned, a confirmation bias that if you don't want to or like feel overwhelmed by interacting with a certain topic, it's obviously much easier to go down a route that will make you feel like you're making the right decision. And then with existing paradigms, yeah, if you don't see the possibility for those to change, then it will also the foundation for the argument of the need for a new system, a digital system, an open system. Like with any new technology, those if it's a completely new technology and paradigm, they always exist outside of existing regulation. It doesn't mean that they're anti-regulation, and it doesn't mean that it's something that's inherently negative or criminal. That's just how these things start. And you can see that over the wave of innovations across all types of industries and curves. So just to respond to some of those arguments, because obviously they are persuasive and it's easy to see things on both sides, but it does take that openness to something new and that curiosity and the willingness to put in the work and believe in something that can be different.
Yeah. Thanks very much, Diana. I'm conscious that Agatha's reached the end of the journey, and that means the thinking is over its race course. This feels much more like a beginning than an end to me, not least because I think in what you were saying, Alice, like we could all frame ourselves as people who are potentially late adopters or actually maybe early ones. It's kind of hard to tell. And if you look at what happens with all the advertising and everything, it becomes quite compelling at times. I've certainly felt compelled at times, and I've not actually been 100% sure why. There's certainly more to be said, to your point, Susan, about understanding the other side of what we meant by good in terms of good investment, and simply watching the line go up is not necessarily good. It's just left to me to say thanks very much to everybody who's come in. It's excellent to see people, Tortoise members, people joining in. And thanks very much, Stephen, for joining us, and also to Reda and Diana online. I hope this has been helpful. I will certainly take it forward into the reporting that we do for the Tech States, SenseMaker, and elsewhere in Tortoise. But yeah, thanks very much for joining, and we'll see you later.